Hey, what's up, my friend? So in today's training, I want to share with you some of the common mistakes that I see traders make when they trade candlestick patterns and how you can avoid it. Number one, traders, right, they trade candlestick patterns in isolation. So what do I mean by this? So let me give you an example. If you look at this chart over here, right, often, right, there will be a number of traders who will look at it and they say stuff like, "Oh, Rayner, look, Rayner, there's a dark cloud cover over here, and from what I read in the textbook, dark cloud cover means that the price should go lower. So let me sell." And when they sell, the market goes up higher and they get stopped out. And then they will look at this chart and say, "Oh, Rayner, there is a bearish engulfing pattern. Look how this pattern has covered the earlier candle. This is bearish, Rayner." And then they get stopped out. And then another bearish engulfing pattern, they get stopped out. Another bearish candle, they short and they get stopped out, and they wonder why. And the reason is simple, is that you don't want to be trading candlestick patterns in isolation. Because candlestick patterns, they are not meant to tell you whether you should be buying or selling, right? Market structure is the one that tells you that. So the first kind of guideline I want to share with you is that market structure trumps any candlestick patterns that you'll come across. This means is that if the market is in an uptrend and you spot a shooting star, it doesn't mean that trend is going to reverse. What it tells you is that more often than not, the uptrend is going to persist and it's going to continue. So whatever opposing candlestick patterns that appear along the way, more often than not, those patterns will fail. So market structure, it trumps any candlestick patterns. And if you think about this, a trend takes anywhere from 100 to 200 candles to form. A candlestick pattern is just one individual candle. What are the odds, right, of 200 candles winning that individual candle? The odds are pretty high, right? Or rather, let me phrase it another way around. What are odds, right, of the one individual candlestick pattern winning the war against the preceding 200 candles that define the trend? So think about that. So now at this point, you might be thinking, okay, Rayner, so how do I trade with candlestick patterns, right? So what is candlestick patterns for if, I can't use it to trade the markets, right? So I'll introduce to you something called the May formula. What is the May formula? So the May formula stands for M is market structure. You want to ask yourself, is the market in an uptrend, downtrend, range, or what? A stands for area of value, right? Where is the area of value on your chart? Is it at support, resistance, swing high, swing lows, pivot points, moving average, trend line channels, etc.? How do you want to define your area of value? E, the first E, entry trigger. This is where candlestick patterns come into play, right? Entry trigger could be something like a bearish engulfing pattern. It could be something like a hammer. It can be something like a shooting star. And the second E stands for exit. Where will you exit your trade? Will you be looking to have a fixed target profit? Will you be looking to trail your stop loss? Okay, so this is what the May formula is all about. And let me give you a few examples, right? So you know what I'm talking about and how the May formula works in action. So if you look at this, right, this is the chart of the pound dollar. Okay, and ask yourself, right, let's apply the May formula, shall we? So what is the market structure right now? If you ask me, the market is in a downtrend, right? You can see a series of lower highs and lower lows, downtrend. A, is the market at an area of value? So from what I'm seeing, right, the price is at this area of value, right, where previous support now could become resistance at this area of value. So area of value, let's call it R, resistance. E, entry trigger. Is there a valid entry trigger to go short, right? From what I'm seeing, right, there is a bearish engulfing pattern over here. Let's call it B. Exits. Is there a valid place for you to exit your trade? Again, this is a potential swing low, minor area of support where you can look to exit your trade. So let's call it S, right, swing low. Okay, so you can see that this is how the May formula works, right? So instead of trading candlestick patterns in isolation, you apply this formula to make sure that all the other factors are lined up, right? Make sure that you are using the candlestick patterns in the right context of the market. If you cannot answer, you can't apply it to a specific chart that you're trading, then chances are you don't want to be trading that particular candlestick pattern, right? Because everything has to fall into place, right? You want to be trading with in the right market structure from an area of value. You have a valid entry trigger, and then you know where to exit your trade as well. So this is what I mean by the May formula. Let me share with you another example. So this one over here, you can see again, right? This is kind of similar to the pound dollar one again. What is the market structure? Again, to me, it's in a downtrend. Area of value, from what I'm saying, this is the previous support, right, that now acts as resistance, and now this resistance is still holding up. Let's call it R. Entry trigger, you have something that looks kind of like a strong price rejection. I think I would say it's a bearish engulfing pattern. Let's call it B. exiting your trades, right, if it moves in your favor, I would say this over here, this swing low, is a possible area to exit your winning trade. Okay, so you can call it again swing low S. Again, this is how the May formula works. Let me give you one more example, right, to kind of illustrate this May formula concept. Okay, 8-hour time frame. You can see that over here, again, same thing. I zoom out this chart. What is this market structure at this point? Again, just pull out MAEE. So whenever you want to put on a trade, just pull out this formula MAEE and ask yourself, what is this market structure? From me, this looks like a potential accumulation stage or even a range. So let's call it potential accumulation stage, right? A. Area of value, right? We are at this area of support that you can see over here. So let's call it S. Entry trigger, we have a hammer over here. Let's call it H. As for exits, right? So exits, there are two components, right? Exit when you're right and exit when you're wrong. So exit when you're wrong pretty much mean where will you put your stop loss. So usually I set my stop loss 1 ATR below this lows. So somewhere here. And as for exit when you are right, if you look at this, right, this over here is a potential resistance area. So let's call it R, right? This is where you could exit if the market moves in your favor. Okay, so again, this is how the May formula works. And just to share with you, right, this formula, it's not the holy grail. You will have winners, you will have losses, but what's important is that it puts, right, your candlestick patterns, right, into the context of the market, and that, right, should, right, improve your trading results. And yep. Okay, so with that said, let's move on, shall we? Mistake number 2, right? You don't want to memorize candlestick patterns, right? So this is something that I myself am guilty of, right? When I first started trading, right, I came across candlestick patterns and I was fascinated, right? So many patterns, right? Morning star, evening star, harami, doji, hanging man, shooting star, bearish engulfing, bullish engulfing. I'm amazed. So I tried to remember every single candlestick patterns out there, and I tried to put the meaning, right, of each candlestick patterns, right, to whatever name it has, right? Like for example, 3 white soldiers, right? 3 black crows, stuff like that. And after a while, I got burnt out, right? Because the market is always changing, right? The patterns may not look identical to what I just memorized, and I had to, ask myself, right? Which pattern does this fall into? All right, which is the right answer? So you can see that when I tried to memorize candlestick patterns, right, and the market changed a little bit, I got lost, I got frustrated, I didn't know what to do. So here's the thing, right? You don't want to memorize candlestick patterns. Instead, what you want to do is to understand candlestick patterns, right? The keyword here is understand. Now you might be wondering, how? Well, I'm going to share with you how to do it, right? By using these 2 questions. And oh, by the way, if you're enjoying this video so far, hit the thumbs up button and subscribe to my YouTube channel. The link's all below. Right, hit subscribe. This way, whenever I publish a new training, you will never miss it. So now, these 2 questions, right? The first question, where did the price close relative to the range? This would let you know, right, who's in control. Is it the buyers? Is it the sellers? Or nobody's in control? The second question, right, what's the size of the candle relative to the earlier ones? This tells you, right, if there is any strength behind the move. Is there any conviction behind the move? Is the move for real, or is it just, a weak move? Okay, so let me give you an example. First question, where did the price close relative to the range? So you can see over here, the first one is that the price, it closed near the highs of the range. This tells you that the buyers are in control. That's how they are able to be closing right near the highs of the range. And now another mistake that traders will make is that they'll start to find shortcuts. Oh, Rayner, does it mean that, if the candle is green, it's bullish, candle is red, it's bearish? So simple. Well, not quite, because remember I said that where did the price close relative to the range? So over here, you can have a bullish close, a higher close, but this, right, doesn't tell you that the buyers are in control. In fact, this to me, right, shows me, right, a strong price rejection. It shows me that the sellers are in the background, right, pushing the price from this highs all the way now near the lows of the range. This to me, sellers are in control. So again, don't just see green means bullish, red means bearish. It doesn't really quite work like that. You have to look at where did the price close relative to the range. Second question, right, what's the size of the candle relative to the earlier ones? And the purpose of this question is you want to know, right, is the move, is it for real? Is there any strength behind the move, or is it just a weak move that, nothing much is going to happen? So let me give you an example. So if you look at this over here, so over here you see a number of a bearish engulfing pattern. There is one over here, okay, and there is one over here. And this is, I would say, a dark cloud cover as well. But notice that all these candles, right, yes, the sellers, they are in control, but is there any conviction behind the move? Not quite, right? Because if you look at this this candle, right, prior to it, this range of this candle is pretty much similar to the range of the earlier candles. There really isn't much of a difference, right? So in terms of the power, in terms of the strength, in terms of the conviction, it really isn't there. So likewise for this particular candle, okay, again, the range of this candle is relatively small compared to the earlier one. So again, there's not much conviction behind the move. So what does conviction look like? What does strength behind the move looks like? So let me give you an example. Look at this candle over here. This is another bearish engulfing pattern. But notice the range of this candle compared to the earlier ones. Do you see the difference? Do you see the difference? The range of this candle. It's so much larger compared to the earlier candles. This tells you that there is conviction behind the move. This tells you that there is strength behind the move, right? Because the range of the candle is just so much larger relative to the earlier ones. This one is another example. Notice the range of this candle. This candle is so much larger than the earlier candles as well. Same for this, right? The range of this candle is much larger than the earlier candles as well. So this gives you a good idea that there is conviction behind the move. Okay, and if you understand this concept that I just shared with you, if you understand this two question that I just shared with you, you don't ever have to memorize any candlestick pattern again. Just know these two questions and you can understand any pattern that comes your way. Number one, where did the price close relative to the range? This tells you who's in control. And number two, what's the size of the candle relative to the earlier ones? This tells you whether there is any strength or conviction behind the move. Moving on, right? Mistake number 3. Traders, right, they tend to look at candlestick patterns individually, right? They don't look at it as a group, right? So when you just look at one candlestick pattern, it only tells you a small part of the story, whether the buyers close higher or the sellers are in control momentarily. But when you look at a group of candles, right, it tells you the juicy part of the story. It tells you stuff that individual candlestick patterns, right, are not able to. So let me give you an example, shall we? So if you look at this, right, this is the chart of pound Swiss franc. So notice over here, this group of candles, it tells me that the buyers are in control, right? The range of the candles, they are expanding. They broke out of this area of resistance and buyers are in control. Then what happened is that volatility shrank, right? We went into this range over here and volatility in the markets shrank. So you can see that if you were to just look at this individual candlestick, right, you might look at this. Oh, this is a hanging man. Oh, this is a long-legged doji, right? Indecision. Oh, this is a higher close. Oh, this is like a spinning top. Oh, this is a shooting star. Oh, this is a bullish engulfing pattern. Oh, this is something like a spinning top. Oh, this is a small doji. Right, if you look at this individually, you will confuse the heck out of yourself and you don't even know what to do. Right, but if you just take a step back, look at it as a group of candles, right, the story, right, will be much more clearer. So as I was saying earlier, if you look at it as a group of candles, right, you see volatility expansion, buyers are in control. Now you see volatility contraction. Okay, the tug of war is going on between buyers and sellers, but your bias, your bias, BIAS, right, should be towards the upside, because after all, you notice that the market structure is in an uptrend. So you want to be looking for buy opportunity. At the same time, right, you know that in this volatility contraction, right, there will be traders who are looking to short or who are short and traders who are long. And where will they put their stop loss? Chances are traders who are short would have their stop loss above these highs, and traders who are long will have their stop loss below these lows. But since your bias is towards the upside, you could potentially look to trade the breakout of these highs in anticipation of higher prices, right? Because you saw that earlier, this group of candles, it shows that the buyers are in control. You have strong buying pressure. That could possibly happen again, right, if the price were to trade above these highs, triggering the cluster of stop loss, right, and attracting momentum and breakout traders to take the long trade as well. So that could happen. So can you see how this story, it's much more fuller, it's much more juicier compared to trying to read individual candlestick pattern. Oh, long-legged doji, indecision in the market. Oh, this is a higher close, buyers are in control. Oh, this is a shooting star, this is bearish. Come on. Okay, so the key thing here that I want to share is learn how to look at candlestick patterns, not just individually for entry trigger, but also as a whole, so you can see, right, what's the big picture, right? What's the story? What is the thing that's about to occur, right? Where will traders enter their trades? Where will traders get trapped? Who's in control, right? What is the preceding price action before this volatility contraction pattern, etc. So let's do a quick recap, shall we? Number 1, don't trade candlestick patterns in isolation, right? Because as I've mentioned, right, the trend, the market structure, it will destroy any candlestick pattern that you come across. And if you want to use candlestick pattern, remember the May formula: market structure, area of value, entry trigger, and exits. Number 2, don't memorize candlestick patterns. You will burn yourself out. Instead, right, if you want to understand any candlestick pattern, just ask yourself 2 questions. Where did the price close relative to the range? Right, this tells you who's in control. And what's the size of the candle relative to the earlier ones? This tells you, whether there's any strength or conviction behind the move. And finally, right, don't just look at candlestick patterns one by one, right? Learn to look at them as a group as well. This gives you kind of like X-ray vision, right? That would elude most traders and give you a deeper insight to what's going on in the markets. Sounds good? Then here's what I want you to do, right? If you are enjoying this type of content, right? You want to learn more about candlestick patterns, right? So what you can do is go down to my website, tradingwithrayner.com, and there is this guide over here that will complement what you have just learned. It's called the Ultimate Guide to Price Action Trading. So you will learn stuff like support resistance, you'll learn more knowledge on candlestick patterns, you'll learn how to better time your entries and exits, and simple trading strategies, right, that you can use to trade the markets. It's all in this guide over here. So just go down to my website, click this orange button, and I'll send it to your inbox for free. So go do it right now. And with that said, I've come towards the end of this video, right? If you've enjoyed it, hit the thumbs up button, subscribe to my YouTube channel, and I will talk to you soon.